Maverick traders. Welcome out to your market roundup for September 25th. Corey here with you. Let's jump into it. We always take a look at the markets from a top-down approach. So we're going to talk about what's moving in commodities, what's happening in the broader markets, what news of the day is important. Then we're going to go into sectors and ideas that way. I've been highlighting the energy sector as a potential sideways area of focus. That's been working. So we'll look at that a little bit further today. And then always we highlight a couple of bullish, couple of bearish trades as new ideas.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's break down what happened today.
All right, so as we look at the market, really kind of a quiet day. There wasn't too much happening. At best, the NASDAQ and the Russell 2000 were up about 0.5%. Oil and gold down about 0.5%, but basically kind of a digestion of the recent sell-off. That was really what was happening. Now, AI continues to grow and expand use cases. This is going to continue to be the case. We're seeing this in company earnings where they're touting their AI advances and so forth. That's going to continue to be something to pay attention to. Advanced decline line shows that it was a quiet sideways day, about equal advancers versus decliners. Now the 50-period moving average continues to get worse and worse. Last week, when I did the market roundup on Monday, it was about 70-30. Notice the decline, about 80% of stocks now below. It speaks to, even though we were in a sideways consolidation, the odds favored a downside break, and a downside break is exactly what we got. So as we look at the S&P, this is the way I drew it up. We were in a symmetrical triangle. These lows and these highs were doing a volatility compression. So here we were last week, and I was on record saying, I think we'll break to the downside. I expect that. I fully anticipate that. Now, admittedly, I had more bearish trades on, but I did close a couple of them just prior to the Fed meeting as this started to bounce. In hindsight, I'd have been better off leaving those on, but I was skewed bearishly, no doubt. Consolidating pattern, but expecting a break to the downside. So this was a welcome sight for me personally. And we've gotten lower prices. We've plunged to the downside. I think we're in full sell the rally mode. So will rallies happen? Yes. But the zigzags should continue to the downside. We are in the process of making lower lows. The next rally should create lower highs, and away we go. The NASDAQ, same dynamic. You could say, well, but we've got this support level. Well, maybe temporarily. You probably can create a little inverse cup and handle or something like that. And if you wanted to do the math on that, it's not really a bad idea. If you said, well, how far can we bounce? The NASDAQ right here gives you a good idea because you can measure the size of the cup. In this case, it's an inverse cup and handle. It's bearish, but basically you've got around 380 at the top of the range, and then you've got about 355 at the bottom of the range. The distance between those is 25 points. So that's the size, roughly. Again, this is not an exact science. This is to put things into perspective. And you say, okay, the inverse cup is 25 points in size. What the handle should be is about 30% of the size of the cup. So what's 30% of 25? It's 750. So if we bounce from 355, we probably go up about $7.50 or up to about 362.50, and that would be the short zone. That would be the, hey, that's about all the bounce we're going to get out of it. And that's kind of what I would expect is, will there be a mild bounce? Yes, probably so. Will it fail? Absolutely. Expecting that to be the case personally. And right up there, a small bounce up to about 362.50 from a risk reward perspective is a pretty good spot to look at bearish opportunities. So when I look at this, I think markets are on their way to lower prices. Now, as we look at the heat map, Energy a little stronger. It's definitely the best performing of the sectors. Consumer defensive, you can see there's a little more red there than anywhere else, but ultimately I think it's just a case of kind of a sideways day, about half and half. There's a few green, a few red, not too much to extrapolate from that. Our outlook, we came into this week bearish. We've kind of been leaning bearish. We would continue to lean bearish, even though there's probably a little bounce happening in the next couple of days. I'm really continuing to expect some downside pressure. All right, so some new trade ideas. There's not a lot on the bullish side that looks all that enticing. We've got a couple of names. Energy, we continue to focus on the more neutral, and I think we could stack up a lot more bearish ideas because most things are in downtrend. So there's just going to be more setups, more opportunities. We talked about that last week. It's even more that way this week. So if we look at a couple of the bullish charts, Amgen, recent breakout to new highs. How many stocks can say that they made new multi-month highs in the last little while? Not as many, right? Amgen is one of the lonely survivors here, and a slight pullback, but I suspect if you're going to look at areas of interest for upside trades, Amgen would continue to be one that I would look at as a bullish idea. Costco also looks interesting to me. The problem with Costco is that it reports earnings this week, which will probably be to the upside, just given the fact that that's the trend, that's the momentum. But earnings are always a wild card. We don't know for sure how that's going to behave. But if you look at the price action here and we look at the upside potential, again, it's a cup and handle type of dynamic where you plunged, you retest the resistance, you back off slightly, and it looks pretty solid for an upside trade. So Costco does have earnings, but if I was leaning one way or the other, and I don't know if I'll take a position or not, but if I were, it would be to the upside. I'm less inclined to be very bullish, of course. Now, energy sector. I highlighted this one for the first time a couple of weeks ago where we just said, look, it just seems exhausted. It is probably not going to go down a whole lot, but I do not expect it to go up much anymore either. So for me, it was really an XLE neutral idea. I just think that's where we're at in this process. And sure enough, we're just basically right around those same prices. So as far as sectors, this one hasn't really given much back. It's holding up better, but it's probably not going a whole lot to the upside in the short term either. Fast forward another week from now, and I'd suspect we're going to be right around these same prices. So I still continue, even though it's a couple of weeks into its sideways pattern, that's one sector where I'd expect it to continue to stay a little more sideways. On the bearish side, there's so many charts like this that have plunged. Now it would be most interesting to get a weak rally. And when I say weak rally, I want lighter volume as it rallies. I want smaller candles, just kind of a mild walk back up. And then I would use those bear rallies for the next sell-off. Here's Dow Incorporated, Dow Chemical, continuing to expect downside movement. We have broken support. 3M company, similar type of dynamic. So I don't know if these are ready to trigger in the immediate term. They've broken down. If I was going to do anything, I would just jump on board and short them, but you might get a little bit better prices with a mild bounce. On those weak rallies, I would continue to focus on downside trades. So markets are out of that consolidation. We said odds favor to breakdown, and sure enough, it seems to have happened. Thursday, we get final GDP. This is not something that's a huge market mover, but it's one of the events this week. And then earnings, we mentioned Costco, but there's also Carnival Cruise on Friday, Micron, Nike. I think those are, I don't remember for sure, Wednesday, Thursday type of time period. Not a lot of companies reporting, but a few that could move and that are a little bit more significant stocks to watch through earnings. Hope you enjoyed the market roundup. Have a great rest of your day. We'll see you next time.